All right, everyone. So let's just review the ES and the opportunity that it gave today. All right. So in the first thing to notice, as I explained yesterday, this gap is going to get filled. So you had this here, this gap on the ES, and as soon as I initially got this sell over here with all of this, 31, 42, that's distribution in that area. So you see when it's doing that and there's a reversal down, why is there, anytime you have volume, right, at a high and it's not sticking, meaning there's reversals after that, you have to ask yourself, why is the price going down when the volume is up? And the reason why this volume is up here and the price is going down is this distributive action. So, I mean, it made sense. It was distribution. The volume it couldn't hold, and the market made that low. So it's just gonna break. You just don't know when and where it's gonna go. So the most obvious is to fill the gap and come back here in this area, right? And so it took 2 days. So they did all the distribution, made that low, and knew they're gonna screw up, the distribution. So then it got tested here, and it was a low range day yesterday, which was a total fucking disaster because it's not tradable. Yesterday is not tradable. Day after Labor Day, it's not tradable because of the very small range. It was half the normal range. Half. So how are you going to trade that? I think it was half. I forgot what it was, but it was really, really bad. It was really bad. So if they're not going to break it yesterday, they'll break it today. So this was the distributive action. This was the sell. So market is on sells. Now the bullshit attempt here. All it did was test. Yeah. After that, it made that lower lows on sells. And then after that, they're absorbing this area or doing whatever the hell they're doing at the support level to break it. Alright, so I mean, I knew it was going to come back down here, but it's just a matter of getting the signals and executing. So this was yesterday's bullshit move that just tested, right? It just tested. And then today it started doing this. So I knew that they're probably absorbing the demand at support, right? They're absorbing the demand at support. It's just another form of redistribution to go lower. So they're going lower. And then you have the initial break right here. This is the initial break right here. And then they did an up thrust and then finally the breakdown. So even if you got out, even if you got stopped out, I mean, you have to just get in because you realize is this up thrust. See the little wick? So you just get back in and you can ride the move. You just have to be confident about that. This is a bullshit attempt to. It's just a shakeout. How you know that is because after the break, on the break, it's 70 volume. On the move up, it's only 21. Does that look bullish? No, it's just the upthrust attempt. And the S&P typically has an upthrust or spring before markup markdown. So then it just went down. Nothing more than that. And I have to be a little careful now, but that was a move, and this is a very nice move. You know, now it's a little, it's overdone right now. It's too much selling here. All right. So I don't know how much more juice it has. It's just. You see this 157K? This is exhaustive. So I don't want to play around here. And this wick right here is telling me something. Right there. When it attempted to go low, and then what it did was it closed high end. That's not what should happen on a breakdown. I mean, if it breaks, right, it should be red. But instead, it went down and then closed high end on an attempted breakdown. Yes, there was a red after and all of that. But if you see, it's only 1 bar green again, 2 bar green again. So there's some type of issue. And they hit 460. Yeah, you're not. Anyway, so for me, I'm done. But that's the idea. Okay. So what lessons do you take from this? First is you have to know what's going on in the higher time frames. For me, I know that this distributive action right here. I know this after this break. Because volume, and this is in Wyckoff's first study, by the way, when he talks about New York Times and he talks about a turning point in that uptrend. He talks about, well, all that volume goes up, but it cannot hold. The price cannot hold. Price dips below the lows and makes red bars after the big volume on the green bars. Similarly, a big volume here, and then you make a red bar, there's a problem. This means that this becomes resistance. And after that, you can see it becoming resistance and then hugging support here and then breaking down. So that's the first thing. Volume needs to hold. When volume does not hold on the green bars and you get a reversal, red reversal down, the volume that's on the up green bars is distribution. That's a Wyckoff idea that came in his first study that he introduced on, and I think it was NY Times. Anyway, so what's the second thing is, the second thing is right here. Market goes sideways and then breaks. This is a breakdown, very clear breakdown on volume. Right? Right there. 42. Right there. That's the second thing you see is a very clear break. There's one other key thing that I explained to all of you. I don't know how many times, but it has to do with the concept of effort. What is this and this? When you are analyzing bases, consolidation, remember market just usually is just in that very easy to see base, breakout, base, rally, base, right? Or just the thing is you want to examine the base. You see this effort. When that happens, the market is saying I can't go up because they keep selling. They sold here, stopping the market from rallying, and they sold here, stopping the market from rallying and leading to this reversal. Your level of confidence should spike when that happens. It should spike like crazy. And you want to know what's going on right now? This. Bingo. A lot of effort, and now it's trying to pick up or at least do a reversal. That right there is saying, well, I'm trying to go down, but I can't. So at least a pullback should be expected. That's exactly what's going on. So the effort here and the break makes you very confident for a short. And but the thing is, like, I have to look at the other charts because Effort could also mean it's effort to break above the highs and absorb them. Absorb the highs and break. So, you just have to kind of look and see, is this effort absorbing the highs? And then you have to go to your bar chart. Or is this effort bag holding? Here, this effort is bag holding, which in this case is distributive. This is also bag holding, distributive. Break. Now it's easy breezy short. And then, so when you're analyzing sideways action, always look for effort. Always look for effort. But you're going to have to then look at the bar chart to give you, or candle chart to give you an idea. Which one is it? Is it trying to break, or is it trying to absorb? Is it distributive bag holding, or cumulative bag holding? Like over here, this is right here, right? So this just led to the bounce, and that led to a further sell. I'm surprised I didn't come to 55s. So we don't really know until the break. So just wait for the effort and then wait for the break. That right there should be very, very clear to you. If it's just the effort and a little bounce, the effort is setting up the bounce because they're doing the short covering at a level. But if it's effort and a big move, that should make you extremely bullish. Right? Because it means it cannot go down and they're going to go in the other way, probably change behavior or volume off the bottom. And now we'll see what happens. So over here you have 89. There's a lot of volume coming in here. So anyway, so when you're looking at bases, there are two behaviors. One is effort and the other is lack of demand or supply. But they don't mean jack shit until you see the reversal, meaning you need to see the bar break up or down, and that will clarify, what's what. Like here, they've just set up the little bounce, offering you the short opportunity, and then it started going back down again. Now, if this green bar right here, this 2 bar was a breakout above these highs, that would signify potential reversal to the upside. Because that means the effort is not a counter trend pullback. It's not a pullback. It's much more of a reversal. So anyway, that's I think the second lesson. And third is, once you have base and you have a break, I mean, it's you just have to examine it to see if that's good distribution or good accumulation to put on a trade, put on your sells. All right, I'm done. Take care. Have a good day. Bye.